Hello everybody, today we're going to be talking about Metaplanet as I believe it is the next great Bitcoin investment. Everybody's talking about Metaplanet, folks. Everyone. Twitter is on fire with Metaplanet talk. The share price has gone astronomical over the past week. I've opened a position. Not financial advice, of course, but we're going to get into it. Also, really quickly, I never did a formal announcement that the paperback of my new book, The Great Harvest, AI, Labor, and the Bitcoin Lifeline is available on Amazon now. So please, if you're interested in the interplay between AI and Bitcoin, $14.99 for the paperback on Amazon. I'll leave a link in the description. While everyone's been obsessive over Strategy's Bitcoin purchases and El Salvador's volcano bonds, a small Japanese company has been executing what might be the most aggressive Bitcoin accumulation strategy per share on the planet. As already revealed, the name is Metaplanet, ticker 3350T on the Tokyo Exchange. A modest 500 million in float, and yet this little engine that could is building what may soon be the most torque-rich Bitcoin treasury on Earth relative to its size. I want you to think of it as the unassuming person at the gym who doesn't look like they can deadlift 3 times their body weight, but Metaplanet does. Over the next 15 minutes or so, I don't know how long this is going to take, we're going to dive deep into the mechanics. We're going to run through the math, examine the macroeconomic tailwinds that position this small cap to potentially outperform every other Bitcoin play in the market. By the time we're done, you'll understand why Metaplanet's SAT stack is growing faster per share than even Strategy's legendary Bitcoin hoard. Let's start with the vital statistics, the numbers that matter. Current market cap sits at approximately 179 billion yen, which translates to about 1.25 billion US dollars in today's exchange rate. Following last year's 10-for-1 split, they're operating with a fully diluted share count of just over 483 million shares. Now, if you're wondering what Metaplanet actually does as a business, that's where things get interesting. Most companies have a product or service they sell, but as of now, Metaplanet essentially has their treasury. Yes, they still own and operate a hotel, but make no mistake, management's explicit mandate could not be more clear. The corporate treasury is now the product. Since April of last year, every major financing they've executed, whether equity raises, warrant exercises, or zero coupon bond issuances, has flowed directly into Bitcoin purchases. Not some Bitcoin, not portions of the proceeds, virtually all of it. Here's where it gets fascinating though. The market is currently valuing Metaplanet at 33 cents on every yen of net asset value. That's effectively a 3 times multiple on their balance sheet. And that premium isn't just impressive, it's the flywheel that powers everything we're about to discuss. In other words, the market is already betting that this strategy will work and they're willing to pay a premium to get on the train. Every great company has an origin story, so for those who are interested, Metaplanet's journey began in 1999 as something completely different, Red Planet Japan. For over 2 decades, they operated like any other small cap hospitality chain, running budget hotels across major metropolitan areas in Southeast Asia. The business model was very straightforward, provide clean, affordable accommodations in prime urban locations. Nothing revolutionary, just a solid business model executed well. Then something happened in 2020 called COVID-19. Not sure if you've heard of it, but global travel collapsed virtually overnight. Hotel occupancy rates plummeted from the high 80s to the single digits. For a company whose entire revenue stream depended on tourists and business travelers, this wasn't just a challenge, it was an existential crisis. But as the saying goes, you never let a good crisis go to waste. While the other hotel chains were desperately trying to weather the storm by cutting costs and praying for a return to normal, Metaplanet's leadership was asking more fundamental questions. What if normal never returns? What if we need to completely rethink our approach? In 2023, the board made a decisive move. We're going to rebrand as Metaplanet Inc., and that's not just a cosmetic change, that signaled the fundamental pivot toward Web3 software and digital asset strategy. Then 12 months later in April 2024, so 13 months ago, they took an even bolder step. They're going to adopt Bitcoin as their primary reserve asset. The first purchase was very modest, just shy of 100 Bitcoin, but it wasn't the size that mattered necessarily. It was the precedent. From that moment forward, every surplus yen would be converted into what management viewed as a hard asset immune to Tokyo's expanding money supply. To understand Metaplanet's strategy, we must first understand Japan's economic context. Japan has endured what economists euphemistically call 2 lost decades, a period of suppressed growth, deflation fighting, and creeping monetary expansion that would make even the most patient investor pull their hair out. Imagine watching paint dry, except the paint keeps getting thinner instead of drying. That's been the Japanese economy. Even after the Bank of Japan's latest rate adjustments, real yields remain stubbornly negative. The yen continues to hover near multi-decade lows against the dollar. Japanese corporations sit on enormous cash balances that quietly lose purchasing power year after year after year. So put yourself in Metaplanet's position, kids. You're a mid-cap company with global ambitions. You've got cash on the balance sheet. In most countries, that would be an asset. But in Japan's economic environment, it's increasingly becoming a liability. Metaplanet's management recognized a fundamental truth. An inert treasury in a depreciation-prone currency is a melting ice cube, just like how Michael Saylor had that realization with strategy. For those who might be new here in the Bitcoin treasury space, this strategy isn't about day trading crypto with your treasury. It's about escaping what economists call the silent tax of currency debasement. For a mid-cap with global ambitions but limited options, Bitcoin became the most efficient balance sheet hedge available, a life raft in the sea of monetary expansion. Now we've arrived at the operational heart of Metaplanet, the machinery that makes the entire strategy tick. And I have to tell you, Metaplanet's capital sourcing comes in 3 distinct flavors. The first is equity. When your stock trades at 3 times net asset value, as Metaplanet's does, selling additional shares or warrants brings in triple levered buying power. So think about it. Selling $1 worth of NAV in the form of shares for $3 in cash. That gives you $3 of Bitcoin purchasing power while only diluting existing holders by $1 of current assets. That is what we call financial alchemy. Second financing source are zero coupon yen bonds. In Japan's negative yield environment, these are essentially free leverage when real interest rates are below zero. Borrowing is not cheap anymore. It's like you're getting paid to borrow. Third, they've recently added USD linked notes and have a pending US ATM shelf registration that will unlock deeper capital pools at still manageable coupon rates. Now, here's where the disciplined execution comes in. Metaplanet doesn't let their cash sit idle at all, not even for a week. Within 72 hours of any financing settlement, their treasury team sweeps all proceeds to regulated cryptocurrency trading desks, converts to spot Bitcoin, and transfers those coins to a multi-signature cold wallet governed by strict board policies. The accretion math is beautifully straightforward. Sell 1 billion yen of shares, receive 1 billion yen of Bitcoin. Existing shareholders give up no NAV per share because the dilution is exactly matched by the new assets. This is the key part. The share count, the denominator, remains fixed after the purchase, so Bitcoin per share climbs regardless of the price movement. Now layer in zero coupon debt, and that per share figure accelerates even further because no new shares hit the market at all. It's pure accretion. Of course, this approach is not without risks. This is why governance guardrails are essential. Metaplanet maintains leverage below 30% of their Bitcoin's market value. Their board policies strictly forbid Bitcoin sales, except for debt service or tax obligations. This creates what's effectively a one-way accumulation conveyor belt. It's elegant, it's systematic, but most importantly, it's working. Let's look at where things stand today, May 6th, 2025. As of this morning, Metaplanet's treasury vault contains exactly 5,000 Bitcoin. They have acquired these at a blended cost basis of approximately $85,600 per coin. That is now positioning them 10th among all publicly traded companies globally in terms of Bitcoin holdings. 10th for a company of this size. That's nothing short of remarkable. Now let's address what some might see as a concern. The mark-to-market book value of their Bitcoin currently stands at approximately 315 million against a purchase price of 428 million. Yes, they're underwater by about 26% on their investment. But here's why that doesn't matter, because cost basis is immaterial to the flywheel mechanism. Whether Bitcoin trades at 50,000 or 150,000, the accumulation machine runs on the same principles. What matters is pace and per share torque. It's like worrying about the price of real estate the day after you close on your dream home. The price will fluctuate, but if you're planning to live there for decades, those short-term price swings are just noise. And speaking of torque, that brings us to what is the most important metric in this entire presentation. And that is BPS, Bitcoin per share. This is their North Star key performance indicator. It's the number that management obsesses over. It's the figure that appears first in every board meeting. Adjusted for last year's 10-for-1 split, Metaplanet started with a mere 41 Satoshis per share. 12 months later, that figure now stands at 1,034 Satoshis per share. You do the math on that. What is that? I don't know, 25x? Something like that. So correct me if I'm wrong. 25x. That's a 25-fold increase in just 1 year. and the pace is accelerating. Q4 2024 saw a staggering 310% quarterly growth in BPS. Q1 of this year has added another 96%. To put that in perspective, over the exact same time period, Strategy, the Bitcoin pioneer that everybody watches, added 46% to their BPS. Bitcoin miners like Hut 8, who literally create new Bitcoin, saw their BPS decline. Metaplanet's secret weapon is its relatively small denominator. With a market cap of just over $1 billion, every incremental Bitcoin they acquire has an outsized impact on their per share metrics. At their current acquisition pace, Metaplanet is effectively absorbing almost 19% of the global monthly miner issuance. Think about that. A company valued at just over $1 billion is purchasing nearly 1/5 of all the new Bitcoin coming onto the market. Now, before anybody gets their panties in a bunch about that, I do understand that there is Bitcoin for sale and it's not just mined. I'm just painting the picture. These companies, the Bitcoin treasury companies, are buying up the Bitcoin with no intention to sell ever. So the supply shock is coming, I'm telling you. This means Metaplanet is scooping up supply faster per share than anybody else in the public markets. And not just a little faster, but dramatically faster. And in a market defined by fixed supply and growing institutional demand, that's potentially transformative for shareholders. Now, what you're looking at is not just a timeline, it is a financial flex that would make Elon Musk raise an eyebrow. Let's break down Metaplanet's Bitcoin shopping spree, shall we? March 5th, 2025. They casually drop nearly $500,000 on 497 Bitcoin. And when I say dropped, they bought it with the same energy most of us use to DoorDash Chinese food. 3 weeks later, April Fool's Day, ironically, there was nothing foolish about adding 696 more Bitcoin to their treasury. The only joke that day was anybody who thought this company wasn't serious about accumulation. Mid-April, they added 330 Bitcoin at 85K each. That's 30 million in Bitcoin, or they like to call it Tuesday. And to round out the month, April 24th, 145 more Bitcoin, pushing their total holdings past the 5,000 mark. That's right, 5,000 Bitcoin. What I really want you to understand is that this is not random buying. It's methodical, calculated accumulation with precise timing and unwavering conviction. But wait, I hear you ask, where are they getting all the money? Great question. Welcome to funding engine number one, the equity machine. Metaplanet has engineered something pretty brilliant, a series of moving strike stock acquisition rights. In plain English, they're warrants with no discount to market price. The April batch alone raised between 7 and 8 billion yen, immediately redirected to redeem bonds the same week. Now here's where the financial alchemy happens. The market values each Metaplanet share at roughly 3 times its book value, if you remember that. That means for every yen they raise, they can purchase 3 yen equivalent of Bitcoin. Morningstar currently lists their price to book ratio at 9.1. when including legacy assets, but let's be honest, nobody's buying them for their legacy assets, for their photocopiers and office furniture. The market is rewarding their Bitcoin strategy, and that premium has become so stable, it's essentially working capital. Think of it as a financial perpetual motion machine. The market gives them a premium, they sell shares at the premium, buy Bitcoin, and the process restarts, except now with more Bitcoin per share than before. If engine number one impressed you, buckle up for funding engine number 2, the debt turbocharger. Metaplanet is tapping into what might be the cheapest fixed income market on Earth, Japanese yen. In February, they place a 3.9 billion yen zero coupon note. Let me repeat that, zero coupon. Money for nothing. Cue dire straits. Bitcoin for free. And just last week, they issued a 25 million US dollar linked bond for, you guessed it, more Bitcoin purchases. Here's the beautiful part. The coupon rate is effectively below Bitcoin's historical appreciation rate. So what does that mean? Well, the debt pays for itself through Bitcoin's natural price drift. That's like taking out a mortgage on your house that's appreciating faster than your interest payments. If the equity channel is the accelerator pedal, these zero coupon bonds are strapping a rocket to the car. They're adding coins without diluting shareholders. It's financial wizardry that would make Satoshi himself nod in approval. Now let's break down the beautiful flywheel step by step. Metaplanet shares trade at the persistent premium to the NAV for 2 reasons: scarcity value and yen debasement. As the Bank of Japan continues its monetary experiments, investors are fleeing to hard assets with a fixed supply, like Bitcoin, or companies that own a lot of Bitcoin. Step 2, the company issues new equity or executes warrants at that premium price. Step 3, those proceeds convert to spot Bitcoin within 72 hours. No dilly-dallying, no market timing, just execution. Step 4, the fresh Bitcoin lifts the net asset value per share. The market reprices accordingly, and the cycle resets at a higher level. You might recognize this as the Sailor's playbook, and you would be right. But here's the key difference. Metaplanet's much smaller denominator means each new Bitcoin acquisition has a sharper impact on the per share value. I know I love metaphors, but that's like throwing a rock into a swimming pool versus throwing it into a bathtub. It's the same rock, but there's a much bigger splash in one of them. Management is not shy about their ambitions. They've set public milestones and they're sprinting at them like Usain Bolt with a tailwind. The first waypoint, 10,000 Bitcoin by year-end 2025. That's doubling their current holdings in less than 8 months. Second waypoint, 21,000 Bitcoin by the close of 2026. You notice that number, 21,000, it's not random. It mirrors Bitcoin's ultimate hard cap of 21 million, just at a different scale. It's a statement of intent that they're going for a meaningful fraction of the entire supply. I believe that was intentional. Even if their fully diluted share count doubled again, which would be massively dilutive in a normal company, meeting that target would quadruple today's Bitcoin per share. And that projection assumes that Bitcoin's price stays flat. Does anybody actually believe Bitcoin's price will stay flat through 2026? If you do, I have some pets.com stock I'd like to sell you. Looking ahead, several catalysts could accelerate this already impressive trajectory. First, Metaplanet Treasury Corp in Florida is seeking up to $250 million via an at-the-market shelf offering. So that opens up the deepest capital pool in the planet, U.S. markets, to their accumulation strategy. Second, continued yen weakness. Every time the Bank of Japan prints more money, domestic investors are fleeing the hard assets, and the NAV premium widens. It's like watching a slow-motion bank run on Bitcoin, with Metaplanet as the preferred vehicle. Third, and this is a really important one, there's pending Tokyo stock market reforms that could allow inclusion in passive indices. So imagine thousands of index funds suddenly required to buy Metaplanet shares. That's a structural tidal wave waiting to happen. And fourth, they're beefing up big time with institutional credibility with top-tier advisory hires like David Bailey. When adults are entering the room, the big money is going to follow. Let's bring it all together here. Metaplanet's Bitcoin per share grew 25-fold in its first 12 months. Not 25%, 25 times. That's 2,500%. Now remember, I know I already mentioned this, but Strategy, the previous gold standard for Bitcoin per share, grew by 46% in the same period. And the Bitcoin miners are seeing negative growth due to operational costs and selling pressure. I really think that the miners really wish that they just would have taken on debt. They could have run like fast food companies. They could have run McDonald's and taken out debt. They could have run a franchise McDonald's, taken on debt, and have acquired more Bitcoin. Are they mining Bitcoin and selling their Bitcoin to pay their workers? Yikes. The toolkit is elegantly simple. Sell premium equity, borrow the cheap yen, redirect every cent into cold storage Bitcoin, and publish the monthly transparency reports like they have been doing. No complex derivatives, no leverage games, no smoke and mirrors. This structure effectively turns Metaplanet into a synthetic Bitcoin miner with no operating costs. They're mining new Bitcoin per share even when the spot price is moving sideways. For investors who can stomach equity volatility and believe Bitcoin scarcity will command higher value over time, Metaplanet is offering asymmetric upside with clearly articulated downside protection. This is a balance sheet engine designed to manufacture scarcity per share faster than anybody else in the public markets. While others in this Bitcoin treasury space may be playing checkers, Metaplanet is playing three-dimensional chess, and they're currently several moves ahead of everybody else. Now remember, none of this is financial advice, but it does sound pretty rad.